Assalamualaikum. My name is Nurhani Khalila binti Muhammad Hafizi. We are from Group 11. Today, me and my group members are going to present about Islamic money market governance and financial integrity in the liquidity management.
The Islamic money market is a platform from short-term liquidity management that operates according to Sharia principles. Islamic money market prohibit riba, gara, and masyir, different from the conventional money market. Therefore, governance and financial integrity are important to ensure transparent, equity, and public trust. Governance refers to the regulation, policy, and supervisory mechanisms that ensure Sharia compliance. Financial integrity help prevent fraud, mismanagement, and reputational risk while supporting the objective of Maqasid Sharia. In Malaysia, the Islamic money market has grown significantly with support from Bank Negara Malaysia and IILM. However, challenges such as asset liability, mismatch, and limited liquidity instruments still exist. This requiring a strong regulatory oversight. In conclusion, effective governance and financial integrity are essential to maintaining liquidity, financial stability, and public confidence in the Islamic financial system.
I will discuss Islamic money market governance and financial integrity in liquidity management. Liquidity management refers to ability of Islamic financial institution to meet short-term obligations while maintaining financial stability. Governance ensure that operation comply with both regulation and Sharia principle, while financial integrity focus on transparency, accountability, and public trust. There are three key Islamic finance principles. First is prohibition of riba, which means interest is not allowed in financial transaction. Islamic bank instead of use Sharia compliant contracts such as murabahah and mudarabah. Second, the prohibition of gara and maisir, meaning excessive uncertainty and speculation are not permitted. This promotes transparency and reduce financial risk. Third is risk sharing, where both parties share risk and reward fairly, encouraging responsible financial decision. One major governance issue is Sharia non-compliance, which can lead to financial losses, reputational damage, and loss of customer confidence. Therefore, the Sharia Committee play an important role in monitoring and ensure compliance. In Malaysia, the Islamic Financial Service Act 2013 and Bank Negara Malaysia Sharia Governance Policy have ensured strong governance and Sharia compliance in Islamic financial institutions. In conclusion, effective liquidity management, strong governance and compliance with Sharia principles are essential to maintain financial integrity and public confidence in Islamic financial system.
Okay, for my part, I will explain three main issues in the Islamic money market, which are financial integrity concern, priorities, and also financial reporting and disclosure issues. So first, financial integrity concern basically refer to things like transparency, Sharia compliance, and ethical behavior in Islamic finance. In practice, some instruments like tawarruk can become quite complex, so it's not always easy for stakeholders to clearly understand how the transactions actually work. On top of that, there are also concerns when profit become more of a priority compared to ethical and Sharia principle, which can affect public trust in Islamic financial institutions. Then, moving on to the fraud and risk issues, these include things like manipulation of Islamic contracts, misleading financial reporting, and also weak governance. For example, in some cases, tawarruk transaction may exist more on paper rather than real asset transfers, which creates room for misuse. If internal control and monitoring are weak, this can increase the risk of fraud and even Sharia non-compliance. Lastly, financial reporting and disclosure issues usually happen when information is not fully transparent or consistent. Some Islamic financial instruments are quite complex, so it can be difficult for users to fully understand the report. There is also sometimes insufficient disclosure of liquidity risk, and differences in reporting standards like AA or IFI and IFRS can make it less consistent across institutions. So overall, all these issues are connected and they can affect trust, transparency, and stability in the Islamic money market.
Firstly is Sharia governance issue. Sharia governance issue is a very important in Islamic financial institution because it ensures that all the financial activities comply with Islamic principle. Islamic bank must avoid prohibited elements such as gaira, maisir and riba. The board of committees, senior management and Sharia committee play an important role in monitoring compliance and conducting Sharia audits. If Sharia governance is weak, stakeholder may lose confidence in Islamic financial institutions. So this also create uncertainty in liquidity management activities and affect the institution reputation and financial performance. Therefore, strong Sharia governance is necessary to maintain public trust and to ensure the sustainability of Islamic money markets operation. Next is financial integrity issue. Financial integrity is important because Islamic finance is based on honesty, fairness, transparency and accountability. Transparency in liquidity management transaction helps stakeholders to understand the institution financial performance and risk exposure. However, weak financial integrity may create the information asymmetry and to reduce stakeholder trust, so customers and investors may become less confident in the institution. In addition, institution may face operational risks such as reputational damage and legal consequences if transparency and ethical accountability are not properly maintained. Therefore, Islamic finance institution must ensure that strong financial integrity to maintain stakeholder confidence and long-term sustainability. Thirdly is financial fraud and risk issue. Financial fraud prevention is very important in Islamic finance because fraud contradicts Islamic values such as honesty and accountability. Weak governance and poor internal control may increase the risk of manipulation and Islamic contracts and false financial reporting. So, there are issues that may reduce the stakeholder confidence and negatively affect the institutional reputation and operational performance. Furthermore, financial fraud may lead to the financial losses, regulatory penalties and legal action. However, Islamic financial institutions should strengthen their internal controls, conduct regular audits and improve risk management practices to reduce the fraud risk. Lastly is financial reporting and disclosure issue. Financial reporting and disclosure are important because they promote transparency, accountability, informed decision making. So in Islamic finance, reporting is more complex because Islamic financial products such as tawarruk involve unique structures and Sharia requirements. So whereby poor disclosure practices make it difficult for the stakeholder to understand the liquidity risk and financial performance. So this may reduce the confidence in Islamic financial institutions. However, inadequate reporting may also result in financial misstatement and regulatory for non-compliance. Therefore, consistent and reporting standard and better disclosure practices are necessary to strengthen transparency and to improve the confidence in the Islamic financial system.
The first one is how weak governance may lead to fraud, non-compliance or loss of public trust. Weak governance can create opportunities for fraud, corruption and misissue of funds due to poor monitoring and accountability. In Islamic financial institutions, weak Sharia supervision may lead to non-compliance with Islamic principles, damaging credibility. Lack of transparency and weak internal controls can allow misconduct to go undetected, reducing stakeholders' confidence and harming institutions' reputation and sustainability. Next is how regulation can strengthen accountability and financial integrity. Regulations helps Islamic financial institutions comply with financial and Sharia requirements. Strong regulations improve transparency, accountability and governance. Through audits, supervisions and compliance reviews, regulators can reduce fraud and misconduct. Clear reporting standard also provide reliable information, helping maintain stakeholder trust and financial stability. The last one is what improvement can be suggested. Institutions should be strengthened ethics, integrity and accountability across the organisation. Sharia governance should be enhanced to ensure continuous compliance. Improving transparency, providing regular employee training and using technology for risk monitoring can further strengthen governance. Strong regulatory oversight and cooperation among management, employees and the Sharia committee are also important for long-term success.
Moving on to the recommendations, there are 5 key suggestions. The first one is Islamic financial institutions should provide simpler and user-friendly explanation of liquidity management to improve public understanding. Second, institutions should demonstrate their commitment to Makasih al-Sharia through measurable social and community initiatives. The third one is stronger whistleblowing mechanism should be implemented to encourage the reporting of unethical practices and potential of Sharia non-compliance by employees. Fourth, institutions should enhance transparency through a governance and disclosure rating system, as well as stakeholder engagement initiative. And finally, institutions should regularly collect feedback from customers and investors to identify weaknesses and also to improve governance practices. To conclude, governance and financial integrity are essential for effective liquidity management in the Islamic money market. Strong governance helps ensure accountability, transparency, and also Sharia compliance while maintaining public trust. By continuously improving governance practices and also upholding Sharia principles, Islamic financial institutions can support the long-term growth and also sustainability of the Islamic finance industry. That's all from us. Thank you.